SpaceX joins the Nasdaq today, forcing every index fund in the world to buy it. But here is the catch. Only 4% of its shares trade freely right now. Tuesday, July 7th, 2026. Like and subscribe for daily market updates. Today's agenda: Hook Market Snapshot, Macro and Central Banks, Geopolitical Status, Earnings, IPO and Deals, Closing Summary. Up next, Market Snapshot. Today, the biggest rocket company on Earth joins one of Wall Street's most famous stock indexes, and every index fund in the world is being forced to buy it. It's Tuesday, July 7th, and SpaceX officially enters the Nasdaq 100 at the opening bell. Overnight, Samsung handed the artificial intelligence trade a record profit, yet its own stock fell. And one major Wall Street bank is now warning the whole rally is running too hot. Markets sit at record highs, the Fed's private notes drop tomorrow, and the tension is thick. Let's get into it. With stocks soaring so high, let's dig into what is driving this rally and the central bank policy behind it. We come in off a strong start to the week. On Monday, the Dow Jones Industrial Average closed above 53,000 for the first time ever, a record. The S&P 500 rose about 0.7% to roughly 7,500, and the Nasdaq jumped over 1% to about 26,100. Even the small-cap Russell 2000 climbed back above 3,000. The driver was a roaring comeback in the very chip stocks that had cratered the week before, capping a first half of 2026 that was the best since 2021, with the S&P up nearly 10%. The mood is risk-seeking. The VIX, Wall Street's fear gauge, sits down near 15.5, unusually calm. But here's the catch, and it's a big one. Bank of America is warning that the market is due for a sharp snapback that could erase much of this year's gains, saying speculation has hit extreme levels. When a major bank calls the top out loud, while stocks are printing records, it's worth marking down. Today the focus turns overseas and to the rocket, more on both in a moment. Global politics also play a huge role in oil prices and inflation cooling down right now. For the record, WTI crude is higher on the day, up about 1%. For the record, WTI crude is higher on the day, up about 1%. The macro spine of the week arrives tomorrow. On Wednesday, the Federal Reserve releases the minutes from its June meeting, the first chaired by Kevin Warsh, and this is the detail people outside the U.S. keep missing. This Fed isn't debating rate cuts, it's debating hikes. Its benchmark rate sits at 3.5 to 3.75%, held for 4 straight meetings, with May inflation running hot at 4.2%, and 9 officials still penciling in at least one increase this year. What changed the temperature was last Thursday's jobs report, just 57,000 new jobs, barely half of what was expected, which cooled the hike talk and has traders now pricing the odds of a September move at roughly a coin flip. Yesterday's read on the services economy came in steady, with price pressures easing a touch, which helps. Today brings the U.S. trade balance, a window into how tariffs and import demand are shaping growth. The 10-year Treasury yield sits near 4.5%. Tomorrow's minutes are the market's best look yet at how close a hike really is, and with no fresh Fed forecasts due until September, investors are flying unusually blind into the July 29th decision. That brings us to earnings, IPO and deals. The quiet good news story remains energy. Over the recent holiday weekend, OPEC Plus agreed to increase production by 188,000 barrels per day in August, marking the 5th consecutive monthly hike. This additional supply softens prices and helps cool inflation, a primary concern for the Federal Reserve. The move follows broader de-escalation. The Strait of Hormuz is flowing freely again as U.S. Iran ceasefire terms hold and Gulf exports recover. For markets that feared an energy shock this spring, those fears are steadily receding. Consequently, the commodity board stays soft, aiding inflation control. Brent crude hovers near $72 a barrel, while U.S. West Texas Intermediate sits just under $69. Both trade at lows since late February. Gold drifts around $4,100 an ounce, well below its January peak of nearly $5,600 as a safe place to store wealth. Urgency fades, and the dollar strengthens. Silver has eased alongside these metals. Cheaper energy, calmer markets, and a steadier currency signal relief across the board. Now to crypto. After a brutal June, Bitcoin is finding footing again at roughly $62,800, recovering from last week's dip near $58,000. The primary driver remains weak jobs data, easing rate hike fears, though investor mood stays cautious rather than euphoric. A significant shift has occurred. Attention moved from Bitcoin to Ethereum. Ether gained about 10% this week, holding in the mid-$17,000s. An altcoin season gauge tracking smaller coins against Bitcoin hit a 3-month high. Fund flows explain this rotation. Last week, US-based Ether funds absorbed roughly $1.5 billion, while Bitcoin funds saw outflows. Treasury companies are also accumulating Ether. Bitmine now holds nearly 5% of all existing Ethereum. Additionally, co-founder Vitalik Buterin unveiled plans for the network's largest overhaul since 2022. Conversely, news on Bitcoin is heavier. Michael Saylor's strategy, the largest corporate holder, confirmed selling over $200 million in Bitcoin last week, nearly 3,600 coins, to cover dividend payments. This marks its biggest sale since 2022. For bulls, a sobering statistic emerged. Bitcoin's risk-adjusted return slid to its worst level since 2022, suggesting holders would have fared better in boring government bonds during this period. Investor mood remains stuck in extreme fear territory. On the brighter side, Ripple secured full regulatory approval to offer crypto payments across all 30 countries of the European Economic Area. This milestone represents a step toward mainstream infrastructure that could unlock further institutional capital later. The overall picture shows a fragile bounce with clear rotation into Ether and a market waiting for tomorrow's Fed signal. A small glimmer on the Bitcoin side emerged after record June withdrawals. U.S. Bitcoin funds finally took in over $200 million on the last day before the holiday, snapping a 10-day losing streak. While not yet a trend, this influx ends a dry spell and offers bulls something to hold onto after June's massive outflows. Finally, let's wrap up with the key risks and opportunities for investors watching tomorrow. Now the day's headline act, and it's a two-parter, both about the AI and chip boom. First, SpaceX. At today's open, it joins the Nasdaq 100, just 15 trading days after its record-smashing June debut, thanks to a new fast-track rule for giant IPOs. Because every fund that mirrors the index must now hold it, analysts estimate roughly $4 billion of automatic forced buying. But temper your excitement. Only about 4% of SpaceX shares actually trade freely, so its index weight is a modest 1%, and history shows these inclusions, think Palantir or Strategy, often bring unpredictable price swings rather than a lasting pop. Insider lockups start expiring in the coming weeks, which adds selling pressure. And with a Q1 loss on the books, SpaceX can't even join the S&P 500 until at least 2027. Critics call the fast-track rule a giveaway that hands mega IPOs a guaranteed wave of buying at premium prices. And with Anthropic and OpenAI seen as likely future listings, this won't be the last time. Second, the litmus test. Overnight, Samsung posted a record quarterly operating profit of about $58 billion, a 19-fold jump from a year ago, powered by demand for AI memory chips. That is a loud vote of confidence that the AI spending boom is real. And yet Samsung's own stock fell as much as 8% because revenue slightly missed and traders sold the news. It's the same lesson we keep relearning. When expectations are sky high, even a record isn't enough. South Korea's SK Hynix lists in the U.S. on Friday in a roughly $30 billion offering, so the AI verdict isn't final yet. Finally, let's turn to closing summary. So here's where we stand this morning. The mood is risk-seeking and record-setting, with a genuine vote of confidence in the AI trade from Samsung's blockbuster profit, but cracks of doubt are showing, from Samsung's falling stock to a major bank warning the rally is overheating. The single biggest risk, tomorrow's Fed minutes read in favor of higher rates, reviving the rate hike threat, and triggering exactly the snapback the bears are calling for. The single biggest opportunity, they read soft, and this record run stretches into next Tuesday's all-important inflation report on the 14th, and the Fed's decision on the 29th. That's the sequence: the rocket today, the Fed's notes tomorrow, then the inflation print. The bulls are in control, but the ground is getting less steady. If a clear, honest daily read helps you cut through the noise, do us one favor: subscribe, and we'll see you tomorrow morning. The single biggest risk facing investors tomorrow is that the Federal Reserve minutes read in favor of higher rates, which would revive the rate hike threat and trigger exactly the snapback Bank of America warned about earlier this week. Conversely, if those notes come in soft, the current record run could stretch comfortably into next Tuesday's all-important inflation report on the 14th. Thanks for watching Market Pulse Daily.